everybody. Happy Thursday. How you doing out there? Everybody having a good day? I hope so. I thank you so much for joining us here, watching the show with us. This is a quick show that we do called The Closing Peak. We go over the stock market updates for our customers, of course, as well as those of you that like to participate. We put a lot of work into this show every day. It's amazing how up to the last possible second, it may not even happen. But we make it happen here, and I appreciate you guys joining us here. If it helps you in some way, maybe you hit the subscribe button or check us out at jazzwealth.com. Hey, one of the things we do for our customers every single week is a lesson. Unlike other advisors that maybe don't talk to you, don't really want to help, every week I do a live class just for customers. It is available in the dojo, and so tonight we'll be doing that class on covered calls. So if you're one of our customers, dive on into the dojo. This is our video library here where we have everything. All the different classes you can check out from beginning all the way through the really geeky stuff. And right here, we've got this one tonight at 8 o'clock, covered calls for retirement income. This one's geared towards my retirees, or those of you that are close to retirement, and you want to kind of add maybe an extra layer to what you're doing there, help teach you how that all works. We also have a basic option class. We just did it a while ago. Yeah, part one here. And so we'll expand on that tonight by using covered calls, explaining everything about them, and giving you a few examples, put together a few sample positions that we could talk about. So I hope you'll join us for that. And then every week we do a class. You can see those the list of those classes on the website there if you're interested. Hey, quick shout out to Laura. Laura sent us in some money for our wall of dough. I don't know if you can see it there, but it's $100 from Zimbabwe. Not really worth $100 anymore or anything relative for spending wise, but thank you, Laura, for sending that in. Also, I'll have to take a picture of this wall eventually, but also Sergio sent us in a Canadian $10 bill. Also, we've got, what is this thing here? Portugal. We got some money from Portugal. Really cool looking dollar, old beat up looking dollar there. Really cool if it happens to zoom in there for you. And then some more money from Portugal, 500 Portugal dollars. But that looks really cool. I really like the way that one looks. And then we got €5 as well. So thank you, Sergio and Laura, for sending those in. We'll get those put up on the wall and maybe post a picture or something, because that wall's getting really thick. I do appreciate all of you that have sent in some money here for us to put on the walls. Please, if you do, it has to be something that is really not worth all that much. We're not looking for money from you guys, but just wanted to build a wall of dough from around the world. So that's that one. All right, let's talk about the stock markets today. We've got 124 points on the Dow out of nowhere. S&P 10 points out of nowhere. NASDAQ 23 points and higher after hours thanks to Amazon here. Initially, the market started lower on the day, and really lower over the evening there if you happen to follow. Here's the S&P 500 on the charts here. It's going to show a little bit higher after hours because of the earnings that came out. But basically, we were down on the day. Most of the day, we were lower. In the last last hour and a half or so of the market started to recover. Oil started to recover. All the major indices started to recover. If we go to the Dow, there we go. If you go to the Dow, at one point we were down to the 50-day moving average, all the way down 244 points on the Dow before recovering. This coronavirus thing really got a lot of people concerned, at least initially to start the day. There's now over 8,000 cases worldwide. And the World Health Organization held a meeting middle of the day and said, you know what, we said before this was a little early to call it an emergency. We're going to call it an emergency. However, they didn't suggest restricting travel to China, although the American Airlines pilots would disagree. They've actually filed a lawsuit to stop flying to China in the meantime there. You got 4 cases in Germany that were spread from human to human, and now 1 in Chicago, I believe, where it was a wife or a husband that spread it to their spouse, and so that was the first case of that. Look, overnight you had a lot of weakness. If you go over to Taiwan, Taiwan was down by as much as 6%. I don't really have a better way to show you than this fund here. You also had Korea, Japan, Hong Kong, all lower by over 1% on the day, or their day. And so real weakness overnight, and that caused our stock market to start lower on the day. But we recovered, right? Throughout the day, the World Health Organization came out and said, okay, this is an emergency and everything. And that kind of added a little bit of confidence to the markets overall. And then you had some dip buying in there as well. If you go through the S&P 500, oh, no, that's not it. Mondelez was, come on, Dustin. Come on, man. Learn to type. Mondelez was going to be your best performer out of there, adding the 777 gain on the day, 7.77%. That's all due to earnings. They came out with earnings really good. If you don't know this company, owns a lot of the snack brands. My favorite happens to be Oreo, and so they did really well. Apparently, we're all out there just having a good time with our snacks. In the NASDAQ, your best performer is going to be Tesla there. Here, really interesting chart for you real quick. If we go over to Tesla, and we'll just show the market cap of Tesla. I pulled this up for you. That purple line there is the current market cap, almost current market cap of Tesla, about $116 billion. If you take Ford, General Motors, and Fiat Chrysler, you add them all up together, Tesla is worth technically more than all of those combined, right? So just killer how much that's taken off here since December. You can kind of see it there on the charts. All right, and one thing I want to point out, I get this question a lot. People say, Dustin, why would anybody invest in an individual stock? Why would the retail investor just go ahead and buy a particular stock? Why don't they just buy some kind of ETF or some sort of mutual fund or an index fund or something like that? And there's really no good answer, right? Is it, okay, well, you can buy an index. We're just sort of given all these indices to choose from. And most retail investors will just go ahead and choose that. And they'll just suck it up and whatever happens, happens. But Tesla, to me, is a really good lesson for other companies. What has Tesla done? Tesla has managed to attract people that want to invest in that particular company. So until other companies figure this out, why would you invest in any other company? I could see like Apple, Beyond Meats did a good job of doing that, where people said, okay, I want to invest in that particular company. Pot stocks did a good job of that, although not really profitable. But Tesla is really kind of, in my opinion, that's one of the things they've done really well, is to define a reason why you should buy an individual stock. They hope theirs, I guess, but an individual stock over an index. And so it's really grabbed that attention to the average retail investor to say, well, I have some Tesla, that's done well. Let me look around a little bit. And I love that, because that means you're asking questions. And I sort of revolve this whole business, this whole show, all of our shows around asking questions, because the more you ask, the more you learn. Tesla has just done that really, really well, in my opinion, and much deserved there. So they got a market cap that is just killing all the other companies out there. Hey, we also had GDP numbers come out today a little bit better than expected. So overall growth of the economy continues to, we would say, grow at a moderate pace. It's not gangbusters. I think the Fed even agreed yesterday, saying that we're growing at a moderate pace. One other chart I want to share with you today is the 3-month relative to the 10-year. We actually just put both of them on the chart so you can see. We did invert again. I mentioned this the other day, where the 3-month at one point was trading higher than the 10-year. That little inversion, that's going to creep into the news if that continues to be the case. It right now just keeps pinging it, right? It'll go inverted for a second, and then it'll go back to normal. It'll go inverted and then go back to normal. If we start to invert again like we did last year, you could expect to see that come back up in the headlines. In my opinion. We'll see what happens there. Let's go over to your sector breakdown here and dive into all the goods today. You got semiconductors a little bit lower, hit the 50-day moving average, did recover by the end of the day, but there was just general weakness across the sector there. You could imagine, after now seeing what Taiwan did, that the largest holding in the semiconductors, Taiwan Semiconductor, was going to have a rough day. They did about 2.5% to the downside, although, I'm going to say this for every one of them, trading up off of its lows, so a little bit of dip buying going in there. And then I looked through the rest of the area there. Micron started the day lower, Qualcomm, Broadcom all started lower on the day, but managed to squeak out smaller than expected losses there. That recovery towards the end of the day helped. If you go to financials, they started the day negative as well, but finished quite positive, up 1% for the day. One that sticks out there is Truist Financial in the XLF. It's only 2%, I believe, of this ETF. So it's only 2% of the XLF if you're following along. They had earnings there, missed on revenue, just a really horrible earnings. You could see at one point, that's not a bad tick, by the way. It really was down that far. Just an amazing drop on that stock today. Going over to consumer staples today, bouncing off the 20-day moving average, up 1.5%, almost 1.5%. That's all going to come from Coca-Cola, which had earnings on the day, and Mondelez, which we talked about already, just screaming to highs there. Those two make up 15% of the consumer staples ETF. We happen to own Coca-Cola, and just a great earnings there. So if you happen to catch Coca-Cola's earnings, good dividend, by the way, but 3.25% gain on the day. Their organic sales were the major focus there. It's a big, big company, so they don't really look at other metrics other than organic revenue, right? Like what can we do to grow the company organically? Because they could spend $1 trillion on marketing doesn't really move the needle. And they did well there. This is their largest market share in over a decade. Organic revenue was up 7%. Most people were expecting, the average was about 4.9%. So really good for them there. Mondelez, we mentioned already. They did really, really well. They did one negative. They did say that this current quarter will likely take a little bit of a hit because of the virus in there. So that didn't seem to bother people in the short term. Also in that same space, consumer staples, you got Altria, the tobacco company, shares lower by 4%. We happen to own this one as well, right? So I don't want to sugarcoat everything always looks good here at Jazz. We own this one today. They took a $4.1 billion charge thanks to Juul. It just hasn't been a good investment for them. So that share held back the consumer staples a little bit, but all in all, really good. Utilities continue to be a monster. In fact, today on our 52-week high list, we have 11 stocks on the 52-week high list that are utilities based that hit new 52-week highs. Ever since that breakout, just has not looked back at all, looking really strong. And oil, although technically oil did close down 2% on the day, the electronic session after 2:30 saw a rally just like the rest of the market. Why is that? Well, we mentioned in the past couple days ago, we actually mentioned how oil was moving back into this 52 area, and it's a very technically traded commodity. So when everybody looks back and says, okay, we've sold off into a known area of support, you got a little bit of a bounce there. And it's also extended in the short term, but it's down over 20% from its highs, even with the recovery today. So you got well, a bit of a correction there, as they would say. Bear market at the moment. Communication services off the 50-day moving average today only closed down 1%. The bulk of that was from Facebook. We talked about their earnings yesterday. Margins were the concern there. The stock lost 6% on the day. Now, Facebook and Alphabet, both classes of the stock there, Alphabet, make up 40% of the communication services sector. It's very, very heavily weighted towards Facebook and Alphabet. And Alphabet was lower on the day as well. And like I said, it's about 40% of each one there. So you can understand why there was a little bit of weakness there. But again, recovery towards the end of the day. Transport's down about 0.5% on the day. That's going to be UPS. They reported earnings in there, guided lower, right? So I didn't think it was a very bad earnings report, to be honest with you. I thought it was pretty good, but they guided lower going forward. Obviously, concerns about the virus and everything. Down 7% on the day. That took down your transports today. FedEx was also a little bit lower to start the day, finish the day higher. They have already reported their earnings, so actually, they won't report their earnings for quite a while. They reported for last quarter already. So that's what hurt the transports today. And in healthcare, you got that continued pullback. I know you guys are looking for a pullback in healthcare. It's been a good run there overall. UNH was weaker on the day. Again, all of these coming with the comment of them recovering off their lows. CVS also lower by 1% on the day. And there you have it. So overall, that's your sector breakdown for the day. Let's go on to the 50-day, and we'll talk about some individual stocks today as well. 54% of the S&P 500 is above the 50-day moving average. A little volatility in that number, and we expect that to continue. Mention that every day. Here's the bad news, though. 1/3 of the S&P 500 is in what's known as correction territory. So you look at the stock market and you go, utilities and tech. They're leading the way here, right? That's your strong areas. That's what you get to play with. Aside from that, 1/3 of the S&P 500 is in correction territory, meaning it's just down over 10% from its highs. That's not a good sign. So for all you bears out there that like to find something to grab onto, that's something you could grab onto. That's not really a good headline, and that'll probably start becoming more of the headline as we go. All right, 52-week highs today. You had 37 of them. However, 11 of them came from utilities. We talked about that already. Some of the names that probably make sense to you were earnings related. Microsoft up about 3% on the day. Coke and Mondelez, of course, higher on the day. Those three all earnings related. Danaher is also earnings related, up 2.3%, hitting new 52-week highs. They did good. Beat on earnings there. And so, yeah, pretty good list there. If you take out utilities, still a pretty decent list for new highs on the day. You had 17 new 52-week lows on the day. One of them is going to be Chevron. Chevron did recover quite sharply, and with the price of oil starting to peak up there, of course, that looks good. I think it's going to need a few more days to hit that target goal. We had a stats play there, 1.5% gain 80% of the time. Tomorrow would be the last day for it to get all the way up to the line that you see on the screen. Probably not going to happen. I think it's going to need a few more days, but thought I'd share that with you. ExxonMobil also hit 52-week lows. Of course, it's in the same space there, in the oil space. Up 1% on the day. That one very extended to the downside, starting to recover there if you happen to be watching it. The only REITs that were on the list were the real weak ones. Your Macerich and Simon Property. Simon Property did close near the lows of the day. Those two are just getting hammered, right? A couple other names. You got Viacom hitting new 52-week lows. A little bit of a recovery, but just getting slaughtered in the short term there. And Xilinx, earnings related, continuing from its earnings drop yesterday, lost another 1%. All right, earnings-wise, you also had Sherwin-Williams. This is not good, by the way, if you happen to have a little Sherwin-Williams. Stock was lower by 3.6% today, breaking through about 3-month lows. The reason why it's not good is because what have we been talking about? Home builders are killing it. Look at Toll Brothers, Pulte Homes and all that. They've all just been killing it. And all great comments. Everybody's happy in the home building sector. Sherwin-Williams gets over 50% of its revenue from new home builders. If they're doing well, what's going on with Sherwin-Williams, right? A lot of us would have expected to see great performance out of Sherwin-Williams. If everything's good in the home builder space, why is everything not good with Sherwin-Williams? So some weakness there, maybe some competition in the mix. That's not a good earnings report for them. All right, you got Amazon reporting earnings after hours here. The stock's up 12%. Amazon trading at 2090. You want to see where that's at? We closed the day at 1870. 2090. Look, I got to squeeze the chart. You got to go all the way up here to see where Amazon is going to open tomorrow. They did great. Earnings killed it by a mile. Amazon Web Services just raking in the dough there. Just a great earnings report for them overall. A lot of that coming from Amazon Web Services, but I don't think investors seem to mind, at least at the moment. That stock is trading up $219. Good job, Amazon. All right, so that's what we have there. Let's move on through the list here and see what else I've got for you. And I'll take your questions if you happen to have any. Oh, PayPal beat on earnings, by the way. Also in Verizon, they missed on earnings. The shares were a little bit lower on the day. Tomorrow you got Caterpillar, Church & Dwight, Charter, Colgate, Palmolive, Chevron, of course. That might be helpful to get us up to that line. Honeywell, Johnson Controls, Weyerhaeuser, and ExxonMobil as well being extended in the short term. Dividends, you got Palo Alto, 78 cents, Paycheck, 62 cents, Citigroup, 51 cents, AON, 44 cents, Casey's, General Stores, 32 cents, and Kinder Morgan, 25 cents. Looking good there. A little bit of adjustments in the S&P 600 and the S&P 400. Not too big of a deal there. And hey, if you're watching from over the pond there, happy Brexit, right? Tomorrow's your day, or coming up soon. Your day will be our night. But happy Brexit over there. I heard that they didn't raise enough money to get old Big Ben chiming in time, but still, be an interesting move there. Long time coming. Congratulations. If you wanted that. If you didn't want that, sorry. It's going to happen. All right, let's see what we got here for questions. I'll see what I can help you with. Yeah, after hours, the IBM CEO stepping down, getting a new, I believe they're hiring from within on IBM. Shares quite a bit higher, about 141, 142, right in that range there. So yeah, looking good there. Amazon did kill it. Yeah, great earnings there. Yep, overall margin's good too. Yep. Schwab had a good day. Yeah. If you like looking at Schwab, at a 2.7% day, and also it didn't gap down as much as the market. So it was already kind of hinting a little relative weakness throughout the day. Great recovery for Schwab following their earnings gap down that we saw the other day. I like it. Lou was asking about the MLP there. So AMLP, I mean, sold off pretty sharply here in the short term. Like a lot of things in this space, just a little extended in the short term. In my humble opinion, I think a lot of these stocks are just extended in the short term. You'll get a little bit of a bounce, and that bounce will be your sort of clue to see if it's something you want to hang on to, if you happen to own it or not. If there's a weak bounce and everything else starts to go without it, then you've got something weak going on in there. You might want to take a second look. Thanks for the kind words, Halcyo. I love it. Tesla and Amazon are gorillas that that's a must in a portfolio. Any thoughts? I wouldn't say it's a must, but if you like investing in those sort of things, you're obviously very happy. It's been a good run. Yep. Is there a realistic way to play the coronavirus vaccine, meaning the recovery of that? Like if you assume that this is an overreaction, you would look at travel stocks, your Royal Caribbeans and stuff. Careful, they got earnings coming up. You might look at some of the airlines that are extended. If you're looking to play from kind of a less than elegant way, maybe like 3M, because every picture that they show of everybody over there getting masks, they're all from 3M. I don't know if that's some sort of marketing thing, but every picture you happen to see, there's a guy with a bunch of boxes and they all say 3M on them. So I don't know that that moves the needle at all for them at all, going forward, but that'd be some ideas there. The gambling, stock, Wynn Resorts, Las Vegas Sands, things like that. If you think it's an overreaction. Yep. I hear you. I hope that starts to fade away there. What do you think of INO from a technical perspective? I don't like these biotech stocks, but must have had some kind of news over the last couple of days. You got a lot of volatility, a lot of volume in there. Hope it continues for you, but not something that I like to see. I don't like when that happens. Technical traders look for consistency, right? So anytime there's any kind of news in these biotechs, it just gets wild. You have reactions and repricing of the stock. So it makes it very difficult to trade from a technical perspective, which is why I don't really look at any of the biotechs. One of the reasons that I do. Odds of CVX beating well, I mean, we'll see. The odds of it moving that much are not very good, right? So expected move on this guy is plus or minus $2. So if you look at CVX, $2 gets you close, but that's not going to get you all the way up there, unless it's just some sort of blowout quarter, which how could you expect a blowout quarter given oil prices and energy and how that's all been? So I'd be excited, of course, if it happened, but I think it's going to need a few more days than that. Still very extended. Yep. Verizon versus AT&T, which one's, well, if you like a discount, you got AT&T, right? That one fell pretty good. With their earnings, good recovery today, but if you're looking for a discount or something, I guess you'd hope for that to move a little bit lower, just in the short term for an entry. Verizon really just kind of chopping sideways at the moment. Makes it difficult to say this is the point where you'd be excited to dive in. I can't tell you what to do, but that's just kind of my opinion. Yep. What's the longest time frame a melt up can last? I believe 13 years is 14 years, actually. In our Notes from Jazz this weekend, I'm actually going to share some of that data. We're going to look through the last two secular bull markets and go back through one of them was 20 years, one was 15 years. We're going to overlay both of those, and we're going to go over performance during those, because there's a surprising correlation to not only how the last two secular bull markets performed, almost identical, but also compared to how this market's moving, almost identical again. So we'll cover that in the Notes from Jazz this Saturday. Already putting that together. QCOM continues to be in a steady little uptrend there. I wouldn't say there's any reason to be nervous or excited at the moment. QCOM just looks good. Consistent little uptrend. Are airlines and cruise ship companies too risky of a long-term play? I don't know how to answer that. I mean, in the short term, of course, you've got the virus issues and everything going on there. You've got some issues with American Airlines, of course, outside of the virus. But it really depends on how they account for going forward. So cruise ship companies, what was it, Carnival, that actually kept everybody on a ship until they could test everybody before releasing them somewhere in Italy or something. So until we get some sort of numbers on how they plan to account for that going forward, even analysts, right, they have no idea how to price all this stuff in until they get a little guidance from the companies themselves. Am I turning a little more bullish on Tesla in the short term? No, no, I couldn't do it. I wouldn't change I won't go all politics on you and change my mind. I think it's just super extended. So what? You miss out on the last little bit of it here. Rather miss out on the last bit than get caught buying it somewhere where it may be a while before it gets back there. In all honesty, yeah. Cheer it on. I like Elon Musk. I'll cheer him on, and of course the success of the company. But in the short term, That's a lot to pay, man. And what's your benchmark? Like, how do you measure against anything else? How do you say that's a good buy? I don't think you can. And like every analyst is wrong on that as well, and it happens. It happens. If you have a small portfolio, how do you deal with small dividend payouts? They aren't always enough to buy more of the underlying stock. Is there anything better? Maybe move to a company that has fractional shares. That'll solve that problem. A lot of our customers are smaller, just getting started or whatever. And so if dividend payouts are really small, we can still reinvest it. If you happen to be somewhere that doesn't have fractional shares, that's a bit of a headache. You might want to try somewhere else. Yeah. I love it. All right, well, we'll get ready for our class tonight. I will see you guys later. Grab a drink. It's going to be one where we go a little crazy, right? So not our typical kind of class. I've got a lot to share, and I want to make sure everybody's on the same page. So I will see you at 8 o'clock tonight if you're one of our customers. For the rest of you, I appreciate you watching. Like I said, takes a lot of effort to put this show together, and I'm just happy you guys enjoy it and are here watching. So enjoy the rest of your day, and we'll see you later. Adios.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.